CPI was absolutely nuts. Producers inflation as well as the Fed interest rates tonight coming up. This is Pounds for Breakfast. Okay, good morning, you beautiful human beings, guys. Yesterday was nuts. The CPI data came out, markets went everywhere and above and below in between. Let's get a dive into the data. Let's have a look at what had happened, what is coming up, and what is likely to happen this evening. So really quickly, let's jump into the data. So for the data, in terms of yesterday, what we received, there's a couple big items here, right? Big items going to be CPI year on year for May, right? They had an expectation of bringing the inflation data from 1 year ago till today. They had an expectation to bring it down from 4.9 to 4.1%, right? Which is a big move. They did even better than that. They brought it down to 4%. Moving further, in terms of the month-on-month, they expected to have a month-on-month growth of only 0.2%, which would be a good sign. They got in at 0.1%. So what does this all mean, right? 4% inflation, what does that mean? Well, the reality is the Fed's interest rate goal is closer to the 2% mark. So quite a lot of work between now and where the Fed needs to be in order to keep inflation under control. However, the data came in. My next question is, who the hell is supplying this data, right? That is the big question. I'm really starting to get concerned with, where does this data come from? Is it factual? And if everything else in the world, if we look at business, we look at politics, we look at religion, we look at all these other places, have been manipulated in some way, shape, or form for financial gain, are we naive to think that this is the only place that the numbers aren't manipulated, or that these are clean, above board, and there's no agenda, right? I look at non-farm payrolls that we had about a week and a half, 2 weeks ago, whatever the case may be. Again, unemployment rose, and yet there was an extra, a third of 1 million jobs created in the US. Where did these jobs come from? Who declares these numbers, right? So I'm really starting to get concerned with the data, with the numbers, and the market showed that, right? This should have been a clear win for Wall Street. We should have seen a clear win for US City, a clear win for US 100, even in terms of gold, right? Because again, the stock market has been suffering from that stronger dollar, right? Every time inflation comes in and the Fed raises interest rates, the dollar benefits from that. As I explained in yesterday's broadcast, you missed it, go ahead and watch yesterday's Pounds Breakfast, where I broke down what we could end up seeing, and based on those numbers, what would the market potentially do? So we got all the data out yesterday. Should have been weaker for the dollar. We saw a bunch of spikes. If you guys were in the markets yesterday, it looked absolutely chaotic. In US 30 example, in under a second, there was 1,000 pip move top to downside. We call that a whipsaw. So outside of that, if we didn't receive a whipsaw, it would have been a perfect day trading. However, we're starting to notice this trend when it comes down to CPI, especially these big loaded events. Markets have these massive moves. So putting that aside, where are we now and what do we have to look forward to, right? So very simple. Putting that aside, today we have producers price inflation, obviously based on the producer side, right? Now again, they are forecasting another reduction in inflation on the producers front. So they're expecting, right, on the straight PPI, negative 0.1% growth in inflation. So this would be a massive win for the US economy, not necessarily for the dollar, but this would essentially aid. And this is basically the final hurdle to the Fed interest rates announcement that's happening tonight, right? If we see inflation cooling on the producer side, as well as what we saw yesterday on the consumer side, then the Fed has got everything it needs to potentially pause interest rate hikes. Now, what does that mean? If we see the Fed pause interest rate hikes, this is going to be monumental for the stock markets, right? Stock markets, US 100, US 30 are going to perform extremely well. However, we have seen in the past that the dollar performs well with interest rate hikes, but we've also seen evidence to show us the dollar also performed well when interest rate hikes were paused. So this is one of those situations where the dollar performs well when interest rate hikes happen, the dollar performs well when they pause, and inadvertently the dollar performs well when interest rates are dropped. So this is one of the situations you kind of got to pick your poison. And we're primarily going to look at price action moves for this evening's setup. So this is what's going to happen, right? To be part of Premium Plus, and again, if you are part of Premium Plus, massive shout out to you. We were already in profit on a trade yesterday prior to the data coming out. We had a beautiful pending order set up for the CPI release. However, we played safe when it comes to risk management. We don't account for whipsaws. We don't have these huge 1,000 pip plus type stop losses. so we play it safe, right? Without the whipsaw, it would have been a massive success yesterday, but it is what it is. Playing safe is far better because you can play again on another day as opposed to just blowing out your account. So big shout out if you're with us yesterday. Today, I'm going to try and get us into a profitable position prior to the data coming out, right? And again, we will be sending out those trades to Premium Plus only. If you're not yet a part of Premium Plus, guys, what are you doing? Link down below, open up your live accounts, get in Premium Plus, inbox us, we'll get you sorted in terms of how to get in there. It's an absolute no-brainer. For just over $1 a day, you get some of the best trading opportunity signals that you can find anywhere else in the market, over and above all the free stuff that we offer at DVDM Markets. Anyway, enough about that. So I'm going to be sending out trades into Premium Plus prior to the producer's inflation. However, if you're a Premium Plus subscriber, we will be streaming the interest rate announcement live tonight. Yes, you heard me, live. So we'll be starting just before 8 o'clock. We're going to get the interest rate announcement at 8 p.m. GMT +2. And then we have Powell speaking, or the press statement, at 8:30 GMT +2. And this is where we get all the big questions, right? About the banking crisis. We're going to see a ton of questions about the US economy, stability, so on and so forth, based on the decisions that they make with the interest rate. So there's going to be a ton of trade activity. There's going to be the interest rate announcement itself is going to move markets substantially. Then we get the questions and answers, which move markets substantially. If you've been part of some of the previous Fed interest rate announcements, you know that they have some big movements and have some pretty big ripple effects across the world. So you definitely want to be a part of that. Outside of that, guys, pretty much the rest of the world is confirming where my thoughts are in terms of interest rate announcement, but it's pretty likely that the Fed is going to pause interest rates this evening, right? Again, unless something dramatic happens on the producer side of inflation, which we can't discount or count out, this can still happen. All is very likely for a pause this evening, right? And again, they're going to have to justify what this pause means, because again, the Federal Reserve's main mandate is price stability, right? So they'll have to explain why this pause does mean and or guarantee price stability. What does it mean for markets? And really, again, as you guys know, we're looking at, is the Fed going to come in with that hawkish or dovish approach? Are they going to come in caring, tender, and loving for the economy? This would be good for Wall Street, good for stock markets. Or they're going to come in hawkish, assertive, and say, you know, we will do whatever it takes, whatever is within our ability to curb inflation, even if that means harming Americans, taxpayers, putting people out of work, right? Because again, they need to get that unemployment rate higher. They need to get inflation down. By doing that, they need to put some pain on the US economy. So it'll be very interesting to hear what they say tonight. Now, I've gone through some of my trading data a little bit later. So I've gone through some of my trading data and I've really thought through, you know, where am I most profitable as a trader, and where do I make some of my mistakes in terms of where do I take some losses. And I'm starting to see a pattern in terms of some of these big movements, these big events. I generally am less profitable in these events, and mostly coming down to these whipsaws, right? Building up to an event, we are immensely profitable. Once an event is concluded, we are immensely profitable. So I do just want to say, when you go through some of these big events, right, these massive volatile market moves, it's far better to reduce your risk at times of big events, right? Everyone says, but you know, go big or go home. No, as a trader, you want to learn to live and trade another day. I see a lot of screenshots from people in times of these big events, and I look at their risk on events like this, and their risk profiles are extremely high. So I just want to encourage you, there's nothing wrong with reducing risk on these events. Yes, there's going to be a move, and yes, you're going to see people on Instagram posting these barcodes of them making hundreds of thousands of rands, millions of rand, dollars, whatever. Ignore that. It's all BS, right? Focus on you, stick to your lane, keep to your risk management, and even if you're making $2-3 on a $100 account, even if you're making 2-3% of your account in an event like this, that is a win, right? Because again, these events are volatile. They cause people to make mistakes, over leverage, over risk, so on and so forth. Now, again, if you're a part of HFM, if you got yourself an HFM account, this is where you have options to go up to 2,000 to 1 leverage. Now, a lot of people get this wrong, and I just want to explain this really quickly. The purpose of having high leverage is not to use the full 2,000 to 1, right? The purpose of having higher leverage is that it requires less margin to open a position. Now, having high leverage means that margin requirement is less, right? So yes, you can open bigger positions, but that's not the goal. That's not how it's supposed to be used to aid you as a trader. It's that if you have a 1,000 to 1, 2,000 to 1 leverage, it means that instead of having a trade open and cost you $200, it will now require $60 of margin. So the same trade size will essentially cost you different or smaller amounts in margin, meaning you can have better risk management. You've got more money to essentially position yourself in other positions or other instruments, commodities. But the idea is that it should increase and better your risk management, not for you to go, instead of taking a 1 lot position, take a 5 lot position. That's not the intention. And if you use it in maxing out your account, you will blow out quicker, right? If used incorrectly, high leverage does mean you will blow out quicker, right? So I just wanted everybody to understand. So if you want to grab your hands on a 2000 leveraged accounts with HFM, link down below, open up that account. We are having an amazing time as a trading community utilizing these accounts, and I'm receiving great feedback and testimonials from you all in trading, high impact news events, and so much more. So massive shout out to the team at HFM. Amazing product, amazing services. Guys, you know the drill. Again, if you're part of Premium Plus, I will be sending those trades out into Premium Plus only. And then we have our trade-a-thon, which is going to be the interest rate announcement this evening. We'll be sending out that link. We're probably going to start at about 7:45, get some setups going as we prepare for the announcement. And then we're pretty much going to be streaming and watching Powell live commentary. We're going to have some fun with it. You guys know trade-a-thons, we generally have quite a bit of fun, a much more relaxed environment for us to socialize, ask questions, and just have some fun in the markets while taking it seriously with the goal of making some money at the end of the day. Outside of that, guys, you know the drill. Much love, and I'll see you guys a little bit later. And until then, goodbye.